Good afternoon and welcome, everyone. So today's session is mainly focused on responding to some of your questions. And if any of you have got any questions that you'd like to ask about your small business or anything relating to what you're doing currently, feel free. At the bottom of your screen, you'll see a little chat bar. And you can just type in there, and then I will be able to respond to as many questions as possible. I think one of the best ways of learning as a business owner is when you spend time with other business owners. And I think it's really important that every single one of us do that, because often what happens is most of the challenges that we're going through as business owners are not really that unique, in the sense that other business owners have probably been through it before. And even if they haven't, I think sometimes what happens when you've got a unique challenge or a unique problem in your business, sharing what you're going through with another business owner or business advisor, if you're lucky enough to have one of those, it really helps you to try and come up with solutions. And I encourage you to keep asking. Don't be afraid to keep asking, and to really try to understand what you're doing in your business. And I think, when it comes to the financial management of your business, it's quite a lot of work, just so you understand. I mean, think of the decisions we need to make as business owners. Firstly, it's bookkeeping. We've got to make sure that we keep all this information in an orderly fashion so that we can do what we need to do. We need to payroll taxes, we need to pay income taxes, we need to pay HST. There are just so many things we need to do. Then at the end of the year, we need to gather all that information and then feed it through to our accountants, who then produce our income statement and balance sheet. And then there are ongoing decisions, like, for example, how much salary you take out of your business. If you take a salary, if you don't take a salary, should you, have your loans repaid? Should you be taking dividends? All these different questions that are really important questions that need to be answered. And one of the things you've got to be very, very careful of is just be very careful of taking advice from people that are not more qualified than you. People have great advice to give, but often they've never run a business. They have no idea what it's like running a business. And this is quite an important thing. For those of you that haven't met me before, my name is Andrew Patricia, and I've always been a business owner. But for the last 25 years, I've been mainly educating and training business owners, running seminars, running webinars, running training programs across the country and in different parts of the world. And it's really interesting when you've worked with so many different business owners in so many different environments, how some of the challenges that come up are really almost the same over and over again. I was speaking to a business owner this week that's an architect and a designer, and she was saying, it's interesting that you're not an architect or designer, but you can answer some of the challenges and some of the questions I'm going through as a business owner. And my answer to that is basically the struggles that we go through as business owners are very, very similar. It's really, how do we get more sales? Once we get those sales, how do we manage the money? How do we ensure that our business is profitable? All of those things. And the other part, actually, that I didn't mention earlier on, which is a very, very important one, is as a business owner, you've got that added responsibility, is that you've got to generate wealth as you go along the way. And I was speaking to a business owner yesterday, and I was saying to him, drawing a salary or a dividend every month is part of your living. But the other part you've got to focus on is building wealth. And I want you to understand this. As a business owner, this is your responsibility. The second thing I think that is really important is that we've got to understand that the business's money is never ours. Even if like me, you own your company 100%, you're the only shareholder, that money in your business account is not yours, and never treat it like yours. And the reason it's not yours, well, there's things that you owe. You owe a revenue agency some money. You may owe your suppliers money. All of these things are important things. And if you can separate the two, and that's really, really important, especially from a tax point of view, is you want to separate the two. You want to be, you're this individual and you work for this corporation. Always think about that. Always separate the two. Because otherwise, what happens is we tend to think, well, you know what, it's our business, we own it, we can do whatever we want, and you can never do whatever you want. The other thing that I think is really worth thinking about and understanding is that if you're frugal in your business, you're never going to regret that decision. And I want you to early on to realize the importance of frugalness, the importance of watching every dollar, the importance of managing your money, the importance of having meetings regularly with your accountants and asking those questions, those things that, I don't know if you're anything like me, but those things that keep me up at night. Some of those unique challenges that I go through that keep me up at night that need to be addressed. And it's really, really important to address those things. But one of the first things that I always say to business owners, and remember, if you've got any questions, just post them as we go along and I'll try and answer them. But one of the first things that I encourage all business owners to do is to create a budget. And it's really, really important that you do this. And the first budget I want you to create is not one for your business, but one for your personal life. And I try and emphasize this over and over again with business owners, is it doesn't matter how much money your business makes, it's how much money you spend that is the key thing. So having a very clear idea of exactly how much it costs you to live every month is very, very convenient. So that's the first thing. The second thing is that it forces you to be disciplined, and I've run this current business now for the last 20 years, but I still every month give myself a fixed budget. That's what I do. Every single month, I get a fixed amount because I realize that, if I need to take out a dividend or I need money from my business, there's always a way of doing it. But the discipline's very, very important. I've got to make sure that I allocate a fixed amount of money every month and I live off that amount of money. And it happens very often to me. Friends of mine will say to me, why don't you buy this now? And I'll say, no, I'm waiting to get paid. And they say, what do you mean you're waiting to get paid? You have enough for whatever to buy all these things. But the truth is, it's that discipline. It's very, very important because that discipline will get you through the difficult times, because there will be good times, but there'll also be difficult times. And as a business owner, if you're used to surviving in those really difficult times, it really helps. So I encourage you, if you haven't done this yet, is to create a budget for home. So you know exactly how much it costs to run your household. And then you want to make sure that everybody involved in this household understands. I was listening to my granddaughter earlier on, she's 3 years old, and she was saying, Grandpa needs to go and work because he needs to make money, because when he makes money, then we can buy dolls. You understand, and it's the same thing that we need to understand. So this 3-year-old understands that it takes work before you make money and then you spend it. And I think it's really important that you understand that as a business owner, that if you're not disciplined in your household and if you're spending too much money, this could have a big impact in your business. And we can see it now. I was listening this morning on the news. They were saying that, young people are spending 50% more on their credit cards. And that is a bit scary. And the reason they're doing this is that often we don't see, spending money on our credit cards as an expense, because it's almost like the delayed thing. Don't worry, I'll spend it now and I'll pay later on. And the sooner you can get the discipline, the better it is for you. And it's always really interesting for me when I meet business owners, like myself, that have been in business for many years, and they still got that bit of frugalness in them. They never gets out of your system. So you got to understand that. And that's a good thing, not a bad thing, because then you can generate and accumulate wealth over time as your business grows. So the first thing you got to do is create a budget. And then you want to create a budget for your business. And I had a very good example this morning. Somebody that I mentor, I said to her, I want you to tell me what your fixed expenses are every month so that we can calculate what your hourly rate is. And the idea here is that when you make a product, doesn't matter what the product is, when you make a product, what you want to do is you want to allocate your variables, which are your input costs. For example, if you're baking a cake, it will be your flour, your eggs, and things like that. But you also want to value your time. So when you calculate the price of something, it takes both your time and your labor into consideration, your time and your ingredients into consideration. And she sent me a list of her expenses. And I looked at this, and I don't know her business well, but I thought to myself, this just looks too low. And this is something you've got to be very, very careful of, because we have this tendency, and I even have this tendency, is that we underestimate how much we are spending in our businesses every month. And I don't know why we do this, but we do. We underestimate how much we're spending. So what you want to do is you want to make sure that you know exactly what's going on. And the best way to do that is to get your bank statement at the end of every month and enter these numbers onto a spreadsheet. So you can just visualize it. Or if you use an accounting system, you can just print it out and visualize it. But I like to visualize it on a spreadsheet. That's the way I like to look at things. And then go through every single expense. Because you'll be surprised, and this happens to me regularly, is you forget what those expenses were. You forget that you bought this or you bought that or whatever it is. So it's really important that you go through that. And then using that information, you want to create a budget for your business. So every month, this is what we're going to be spending. This is how much we can spend on advertising. This is how much we can spend on marketing. This is how much we can spend on whatever it is. So you get a very, very clear idea. And you've got to learn to do this. I promise you, this is the key. You want to do it first in your household, and then secondly in your business, or at the same time. And then what you want to do is you want to keep track of your business expenses every month. So you'll eventually become really good at this. You'll do a projection, and then you'll put your actual numbers. You do a projection, and then you do your actual numbers. Because the challenge, some of you on this webinar are maybe new businesses. Before you get your business up and running, it's quite challenging. People like me will say to you, we need you to do projections for the next 3 years. And your thought is, geez, I don't even know what I'm going to do tomorrow, never mind over the next 3 years. But we need that so that we can evaluate your business. But once you've started, from day one, you've got information. And what you want to do is you want to create budgets. And it's really important to do that. So now I've got a really good question here from Dawson, which I'm going to answer. I'm going to have to just do something here quickly, open a spreadsheet so that I can show you. But, often what happens with a lot of us is we're taught things in different ways. So profit margins, for example. As a small business owner, people will teach you how to price things. And if you're from traditional, I was going to say immigrant families, but I won't. But I remember as a kid, they used to give us a number. So I was involved in business from a very young age. And they used to always say to us, if something costs $1, you multiply by 2, or you add 50% on, and that's how you come up with a selling price. So I'm going to show you now, how do you calculate your margins, okay? And if you've got any questions on this, I want you to ask me, because I don't want you to be confused. All right, so I'm going to show you how to calculate the margin on a individual product first. And then I'm going to show you how to calculate your gross margin on your overall business, okay? So this is what you need to have. So you need to have these two things first of all, okay? You need to have your selling price and you need to have your cost price, okay? So you need to have both so that you can calculate your profit margin. Sorry, I'm trying to make this bigger and I'm actually making it smaller. So let's use an example. Let's say I sell bottles of water and I sell the bottle of water for $2, okay? So that's how much I sell the bottle of water for. Actually, let me just turn off this camera. It's easy when I've got the camera off. All right. So a bottle of water I'm selling for $2, okay? And let's say this bottle of water costs me 50 cents, okay? So I buy it at Costco and it costs me 50 cents. So the selling price is $2 and it costs me 50 cents to buy this bottle of water, okay? So what is my profit? Okay, so my profit on this transaction is the selling price, which in this case is B6, minus the cost price, which in this case is C6. Okay, so that is my profit in dollars. So that's how much profit I made on this individual item. Okay, as a percentage, what we do is we take the profit, in this case, $1.50, and we divide by the selling price. Okay, so $1.50, which is D6, divided by B6. There you go. And then that comes out as a percentage. Let me just fix this up here. There you go. So that's your profit margin. Okay, so your profit margin in this example is 75%. Well, let's use another example. Let's say you make candy. Okay, you make candy and the candy costs you 25 cents each to make, and you sell them for $3. Then your profit margin will be, let's see what it'll be. Okay, so what did I do there? No, I put the cost price higher than the selling price. Not a good decision. There you go, 92%. So that's your profit margin, okay? So how do we work it out for our overall business? So I'm going to show you how to work it out for your overall business. It's a similar formula. So you take your revenue, okay? You take your revenue minus your cost of sales. Sometimes people call it cost of goods sold, and I don't really mind what you call it, okay? And that'll give you a gross profit, and then you can calculate. So let's use an example, okay? So last year in my business, we did $172,632, okay? Our cost of inventory, which is our cost of goods sold, was 60. I mean, I put 1 million. Jeez, that's optimistic. So our cost of goods were, let's say, 65,874. So that'll give us a gross profit in dollars of $106,000, which is 62%. So that's the way you work it out. If you're doing it on an individual item, okay, you work it out doing this formula here. And if you work it out doing on your overall business, this is how you would do it, okay? And you could even departmentalize it. Let's say, for example, you departmentalize your business into different sections. You could work out the gross profit on each department. So let me tell you the formula for gross profit in, actually, let me just save this thing just in case any of you want it. Just save it. Anyway, so to calculate the gross profit on an individual product, you take the selling price minus the cost price divided by the selling price. Okay, selling price minus cost price divided by selling price. If you want to calculate on your business overall, you take your revenue minus your cost of goods sold divided by your revenue. Okay, and just remember that what goes into the cost of goods sold or the cost of sales is really important because you want to standardize it. So it's really important that you speak to your accountant about that so they can help you do that. Does anybody have any questions on that? Any questions on that, specifically that little formula that I've just shown you now on the screen? Anybody got any questions on that? And I want you to ask, because what happens sometimes, and it happens to me, is I take it for granted that people understand maybe because they've been in business for a long time or whatever it is. Or the other thing happens is, because I've been doing this for such a long time, to me, this is common sense. And the problem is that common sense is not that common. So just don't be afraid to ask. Don't be afraid to say, well, I don't know, I don't understand. And I can help you like that. The water bottle profit, the water bottle as a profit margin of 75%. Dawson, okay, now I've forgotten this. You want me to, let me go back into it. Okay, so in this case, let's just see. So the water bottle, let's go back to the water bottle. We sold it for $2 and it cost us 50 cents. There you go. The profit margin was 75%. Okay, so that's, we'll call that bottle of water. Okay, and this year we'll call total sales of water last year. So let's call that total sales of water last year. Okay, so the one is based on an individual product. In this case was a water bottle, and the other one is based on the total sales for the year. Okay, so that's how you get it. That's how you get that margin. The profit margin for the individual bottle of water was 75%. For the whole business was 62%. Okay, all right. How would you add inflation? Well, you don't add inflation, because inflation would be included here. Okay, so inflation would be included there. So let's use that example. There was this big debate yesterday on Parliament Hill, and the government was saying to these retailers, your profit margins are too high. So how do businesses include a figure for inflation? So let's say a bottle of water costs you 50 cents because of the inflation, it's gone to 55. Okay, so your profit margins come down to 73%. But let's say that your benchmark is 75. Okay, so you're going to have to increase the selling price of a bottle of water so that you can sell it and make the same profit. So that's where inflation came into. Hopefully that answers your question. So inflation is something that increases your cost of sales or your cost price of your product. So that's how you include inflation. So hopefully that makes you understand that question. All right, let's see some more questions. Yeah, I like the questions. You can ask as many as you want. We're doing this once a month. So Kim, here's the truth. You can do this every day, to be honest with you. Every day you can go through every single product in your business and just randomly check it. Go to your invoices, see how much it costs you, see it's the selling price, and you can do that, okay? In your accounting system, you can do it once a month, okay? Or let's say you use a spreadsheet. Let's say you don't use an accounting system. Use a spreadsheet. So you add up all your sales for that month. You have your opening inventory, okay? Plus your purchases of inventory minus your closing inventory. So let me explain that to you. So let's say last month, I sold $20,000 of water bottles, okay? So I sold $20,000 of water bottles. So to work out what my cost of sales was, how much that product cost me, I have to take my opening inventory of water bottles, plus all the water bottles I bought, minus my closing inventory, okay? So that's the way you work out your cost of sales. Opening plus purchases, minus closing. Kim's asking me, do it once a month? Absolutely, you can do it once a month. You can do it every day if you wanted to. I mean, if you decide, you know what, I want to do it every day, you can. Obviously, it's a bit of work, but you could do it every day if you want. And I think it's really important that you understand this as a business owner, is you've got access to all this information on an ongoing basis. So if you decide, it's today's Thursday, I want to see what our gross profit is in our business, you can go to your accounting system if you run an accounting system, and it's up to date, which is really key. The data has been entered. You can touch a button. It can show you what your profit has been so far. Kim says, should we do this once a month since cost price and selling price might and does change from time to time? Absolutely. When I was in retail years ago, we used to do it once a week. So we used to break up the year into 52 weeks. So we used to calculate it once a week. The challenge with calculating it once a week, you've got to assume that your accounting system inventory is correct, okay? Because if your inventory numbers are wrong, let's say you've got more than you thought or less than you thought, it could be a problem. So I'm not sure what business you've got, Kim, but if you tell me, there's no doubt you can do it every week if you want to. You can do it every month. You can do it how often you want. The key thing is that it takes work, and it depends on the nature of your business. I mean, if you, for example, run a bakery, there's an example. If you run a bakery, it's not difficult to do it once a week. If you run a restaurant, for example, maybe not that difficult to do it once a week, because you can work out your sales at the end of Sunday night. You can take your inventory, and there's so many ways of doing it nowadays. They have simple technology you can use, and then you can work out what your profit is every week. So it's really, really important. But the key here, and I think this is an important one, the key here is the data that you have. Okay, so Kim says retail repairs lessons for musical instruments. There you go. So with that, it's you a service business, and I'm assuming that you have some inventory, but you could do it every week. Every week you could do it if you wanted to. Ideally, you want to do it maybe not every week, once a month. But if I had a retail repair and lessons business, this is what I would do. I would categorize the different things in my business. So I'll have retail. So that I'm assuming is musical instruments. I would have repairs, and then I would have lessons. Okay, so then I'd give them each a category. So maybe call it category 1, 2, and 3. Okay, to calculate your profit margin on retail would be quite easy. You take your opening inventory of instruments plus the instruments you bought minus your closing inventory of instruments. Okay, so it would be a good idea to departmentalize it, and then you could calculate what the profit margins are. And I have no idea what they should be for musical instruments, but I'm sure if you went online and just Googled it or spoke to other musical instrument resellers, they would be able to give you an idea. Okay, for your repairs, okay, you have revenue, and then you have the materials that you use. Okay, that would give you your profit. And then for your lessons, you have your revenue. If you want to include a cost of sale, let's say, for example, you use teachers, part-time teachers to teach your lessons, that would be your cost of sales. Okay, so the idea here is there's not just one size fits all. If I was you, I would sit down with my accountant and work out a way, just like I've shown you now, how to departmentalize your business. So even on your cash register, whatever system you use, if it's a retail sale, we'll call it department 1, for example. If it's repairs, we'll call it a code 2. And if it's lessons, we'll call it code 3, just so that we can allocate the expenses accordingly. And then it'll give you a more accurate profit margin specifically for your retail, because your retail is where the profit margin is. When it comes to, if you do all the lessons yourself, there's no cost of sale. If you do repairs, the only cost of sale would be the materials that you use. Okay, hopefully that helps. But again, the idea here, and it's very, very important, you have the same discussion with your accountant. You have the same discussion, the same questions you asked me, you want to ask your accountant, so they can set up your financials properly for you. So they can set up your financials so you can measure this number, the 75% or the 62%, depending on the nature of your business. Wonderful questions. Keep asking. This is exactly what I like when you ask questions, because then I can help you answer them. Okay, here's another. Oh, there you go. Thank you. You're welcome. Is there a software system we can use this to do this regularly without an accountant? Absolutely, there's a software system you can use. Okay. Here's the thing about software. So in North America, the most common software that we use, so there's two options here. One, you can use accounting software. Accounting software can be very, very effective as long as you set it up properly. And this is usually my advice to small business owners, is get a bookkeeper one account, let's say you're going to use QuickBooks, which is the most common accounting system. Get yourself a bookkeeper or accountant to help you set this up, and then ask them to give you like categories or codes that you could use. So if it's let's go to the musical instruments business. If it's a musical instrument, then it's a cost of sale, it goes under this heading. If it's materials for repairs, it goes under this heading. So I would encourage you to do that. Then at the end of every month, or you could do it every day if you wanted to, just press a button, say, produce an income statement. Based on that income statement, with the ratios, you can tell how you're doing, okay? So that's the one option. The second option is you can use a spreadsheet. I mean, it's very, very simple. Let's use an example. Let's say you put all the sales on one sheet, so everyday sales on one sheet. You put all your purchases of materials or products on another sheet, and then you put your business operating expenses on the third one, okay? So let's use it, let's say for January. In January, I did $10,000 of sales, okay? I bought $4,000 of water, so $10,000 of sales, $4,000 of water. My gross profit is $6,000, and then I've got expenses. I've got my rent, my telephone, blah, 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 all those different expenses. So you can do it on a spreadsheet. I mean, obviously, accounting system is better because it does it automatically. But if you set up a spreadsheet, which again, I like working with spreadsheets myself, and I like to visualize things, but I know not everybody's like me. That makes it easy for me to see what's going on. But there is accounting software. You can use FreshBooks, you can use Wave, you can use QuickBooks. Wave is actually free. So there's a lot of software that you can use. Great questions. Keep asking, and I'll try and answer them for you. So the first thing you want to do is you want to, know exactly what your expenses are every month, and you want to manage those. You want to be very, very frugal. The second thing you want to do is you want to monitor your cash flow. So let me give you a scenario. In 2008, this is what happened to us. We had a lot of big clients, corporate clients, and we used to run events for them, so small business events, and we used to create content for them. As soon as we spoke about the financial crisis, or the media spoke about the financial crisis, a bunch of these clients of ours either reduced their budgets or just cut out the spending on small business. So what happened was our revenue went from a very high number down to a low number. And this is the way we survived, is I monitor the cash flow all the time. I'm obsessive about knowing how much money is in the bank. And I want you to be just as obsessive. I want you to know how much money do we have in the bank, who do we owe money to, and how much money do we have coming in? Because this is the key. Because what happens sometimes is we get all excited about money in the bank, but that may not be your money. It may be owed to accounts payable. It may be owed to revenue agencies, so many different things. So it's really important that you keep your eye on cash flow. And I know in our case, that's how we survived. I mean, when COVID started, I was very, very concerned for myself, firstly, but more for other business owners, because I thought, and I still think, that a lot of small business owners are going to go out of business the next couple of years because of COVID, the impacts of COVID, and it's really going to be a cash flow issue. And the problem is that when the economy is doing really well, you can make lots of mistakes. When the economy slows down, that's when you've really got to watch every single dollar that you spend in your business. So that's why my concern is that over the next couple of years, we could have quite a few small businesses failing. And I've seen it on my main streets. I've seen it when I walk around businesses that are closing down. And it's usually because they run out of cash. They just don't have enough money. They can't borrow enough money to survive in business. So the key thing you've got to be doing is, and I don't care what system you use. I mean, you can buy software. I've never used software. Or you can use accounting software to create a cash flow forecast. But what I use is exactly what I shared with you on Tuesday. That very crude, simple template that I use with money flowing in and money flowing out. I use that for everything, actually, now that I think about it. I use it for my household. I use it for my business. I'm involved in real estate. When I make real estate decisions, I use it for that. And the reason is I want to know, do I have positive cash flow? I want to know how much money is flowing out every month and how much money is flowing in. And the advantage is that when you do a cash flow forecast, actually not next week, but the following week, I'm going to do an exercise on the screen about cash flow forecasting. It shows you how much money you need. So let's use an example. Let's say things are going okay now, but I expect things to slow down over the next 3 months. Maybe I don't have any contracts or whatever it is. I expect things to slow down. What I can then do is, based on my cash flow forecast, I can work out how much money am I going to need, and then I can go and borrow that. So that's what it is. Or if you're the more techie people, they use the term burn rate. You know, what is our burn rate? So how much is flowing out of the business every month so that we know how much money we need, how much money we have on hand, how much is coming in, and what's our burn rate. That'll tell us how much money we need. And it's really important that you understand this. And it's your responsibility, because at the end of the day, I mean, you can get somebody to do it, but the sooner you can learn how to understand it, look, it's going to give you sleepless nights. I must be honest with you. If over the years as a business owner, the thing that's kept me up at night and still keeps me up, not so much anymore, but still keeps me up at night, is cash flow. You know, I do not want to run out of money, because when you run out of money, it makes it so difficult to run a business. I've seen great businesses with lots of potential go out of business because they run out of money. So that's the second thing. The third thing, and somebody asked the question early on about accounting systems, is if you want to check how am I doing, your accounting system has to be up to date. So if you use accounting software, you've got to input the information regularly. And if you don't, well, then it's going to be outdated. And this is the problem I have with accounting software. It's very, very good in the beginning. And I see small business owners get excited and they input all the information and they do that. And then they get bored because it's not their key function. And then eventually they don't input everything. They don't input their inventory, or they don't put whatever. And then those numbers make absolutely no sense. So if you decide, well, I need an accounting system, and I've got accounting software, I would recommend that you get somebody to input the information. You know, employ a bookkeeper a few hours a week. This is what they're good at doing. This is what they trained for. They can then enter the information into your accounting system. And the big advantage we have nowadays is that everybody's used to working remotely. So you don't even have to have them in your office. You can scan the invoices, receipts, send it through to them. You can give them access to your bank account if you want to, which really helps because then they can reconcile your bank account. And it's really important you have all the transactions, because again, this is a typical small business owner thing, is that we estimate. You know, I'll say to people, so how much does it cost you to make a donut? And they'll say, well, about. There's nothing, no estimations. I want you to be accurate. You know, one of my business owners that I'm working with, I had this discussion with her 2 weeks ago about her prices. She put it all on a spreadsheet with all her ingredient costs, all her recipes, and all her profit margin. And I said, that's exactly the way you do it. Because then if the price of eggs goes up, you can see what impact it has on your margins straight away. And then you can adjust prices. And in her case, she was looking at increasing her prices. And she said to me, how much do you think is fair? And I said to her, firstly, go and see what your competitors are charging, and then come back, look at your prices, and then make a decision. Ideally, you want to be close to your competitors, but maybe you can't. Maybe you're, in her case, in a small area, in a small city, and maybe charging what the big competitors are charging doesn't make sense. But it's really important that you understand that if you want to be looking at data, you've got to collect this data. And nowadays, okay, so here's a good question. That's why I don't like using fancy terms sometimes, because it confuses some people. So Dawson says, yeah, how do we calculate the burn rate? Okay, so the burn rate is just another word for cash outflow. So burn rate is basically how much money flows out of your business every month. Okay, so your rent, your telephone, your all those expenses. Okay, so that's your burn rate. There you go. So you've learned a new word there, Dawson. You can use now when you're around the hipsters. You can say, no, our burn rate is about whatever. So that's just a hipster word if I had to explain it. All right, so Mehdi says, I like to do it on an Excel sheet. I do my cost and daily income. However, I would appreciate if you have any template that we can download as a reference. So I do not have any template, Mehdi, but what I would do if I was you, I would go into Google and type in daily business transactions template, and I'm sure somebody on the internet just created one of these. I mean, if I needed one, I could do it quite easily, but you know what? I don't need one, so I'm not going to be doing it. But I'm sure somebody's done it on the internet. So I would look at Google Sheets and I would look at Microsoft. So that's what I would do, Mehdi. Or, you know, maybe some of these, even these small business centers may have one. I don't know. But I remember early on when I started in this business 25 years ago teaching, I used to create all my own templates and things like that. And I used to enjoy it because I had the time to do it. But nowadays, I usually go to the internet, just download something, adapt it for myself, and that's the way I do it. So maybe that's my advice to you. But it's also not that difficult to do. But you'll find one online that's got the formulas inserted already, and then you can just adjust it for your business. But here's my advice to business owners. If you are using a system and it's working for you, keep using it. The problem is sometimes, and it is a problem, sometimes we'll introduce new accounting systems or whatever it is, and it just creates chaos in our lives. But again, for some people, it's the best thing that's ever done. I see a lot of businesses nowadays have it all integrated, you know. So the nice thing, again, the reason I have a bit of skepticism about accounting software is because I'm old. I've been in business for a long time. Nowadays, the technology's advanced so much. You know, I even see with e-commerce stores, you know, you can scan all your inventory as it comes in, and then, you know, the system automatically recognizes what it is and stuff. In my day, you had to manually enter all of this information into the computer. So it was a lot of work to get these long streams of documents. Then you had to enter, you had to count stuff. Nowadays, you can just scan things. So it really depends on what your business is, and it depends on what technology you have. But the technology is not expensive. I mean, it's really cheap nowadays. The important thing is entering the information, and you can scan most of these things nowadays. Actually, now that I think about it, everything can be scanned. Even invoices can be scanned because they have recognition nowadays. The other thing that is really, really important, and I was having this discussion with a business owner yesterday. You know, I find the first 3 years of your business are a little bit chaotic, you know, maybe even the first 3 or 5 years, a little bit chaotic. But as you become a more mature business owner, what you want to do is you want to plan ahead for taxes. So let's think of some of the taxes that you and I have to pay every year. We got payroll taxes. So that you've got to pay every month. You can't delay that, because if you delay that, you get penalized. So you're going to make sure that you pay that every month. So the way I do it is I calculate it, but you can use software. Any one of this accounting software nowadays does it. QuickBooks does it. Wave does it. I'm not sure about FreshBooks, but a bunch of them do it. And they're apps that you can employ. I just do it myself. I go onto the government's website. I calculate my employees' salaries, their deductions, and I pay it through. But then I put a reminder on my computer on the 15th of the month. I just do it through my bank. I just go in there. It asks you, what month are you paying for? It asks you how many employees you had, what was your gross salary, what were the deductions, and I just pay it through my bank account. That's the way I do it for my payroll taxes. My income taxes, I pay regularly. So I estimate, or guesstimate is a better word, and then I pay an amount regularly every month, so that at the end of the year, I know exactly, or No, that's not true. At the end of the year, I don't owe a revenue agency as much because they charge you interest on it. So a very good idea is to ask your accountant, because when your accountant produces your financials at the end of the year, what they do is they give you a schedule of what you need to pay every month, okay? Or every quarter, depending on when you're going to pay. The problem I have with those numbers, sometimes they're too high. So some years we have really good years. So the last 3 years, in the case of business launch, have been very, very good years. I don't expect this year to be as big as the previous years. So I will pay less than my accountant said. But again, I understand how the taxes work, and that's the way I do it. But you've got to have this discussion. Otherwise, it's going to be a problem. Free Excel templates and spreadsheets online. Yeah, so somebody says they just Googled it and it's available on the internet. There you go. There's lots of them on the internet. So that's what I use when I'm looking for something. So make sure that you think about this. Think about your HST payments. Think about there's a bunch of things. If you incorporate it, just think of all the payments you're going to make. You've got HST payments, okay? You've got your corporate taxes. You've got your personal taxes. If you're getting dividends on your dividends, you're getting a salary on your salary. All of these things need to be sorted out. Otherwise, you have this scenario. And I've seen it so many times. Business owners are running their business. They're making a draw, all that type of stuff. Come the end of the year, the accountant says you owe a revenue agency $52,000. And they say, what do you mean $52,000? I don't have any money. How am I going to pay that? So this is why that really concerns me. So you've got to understand the basics. All right. So on average, how much percentage of revenue goes to payroll? Okay. So let me tell you how it works. Your payroll works out based on your how much payroll you pay. So how much salaries and wages you pay. So let's use an example. If you're paying somebody $3,000 a month, it works out more or less about 10%, okay? Actually a little bit less, but let's just say 10%. Actually, the number's just gone up. So you've got to make sure that you calculate it. But you can easily go online to any of the revenue agency websites. They have a calculator and they'll calculate it for you. So it's not based on revenue. It's based on employee salaries. Okay, Dawson? Got nothing to do with revenue. It's got everything to do with your payroll, okay? So whatever your payroll is, you're going to pay taxes on that, okay? So let me just simplify it for you. Let's say I pay my employee a salary of $3,000 a month. I've got to deduct taxes first, okay? Then I've got to deduct employment insurance, and I've got to deduct Canada pension plan. If you're in Canada, doesn't matter where you are in the world, they all have their different ones. And then I have to pay a portion myself, okay? So as a business owner, I've got to pay a portion and I've got to deduct it off their salary. So it depends on your payroll, not on your revenue. It's got nothing to do with your revenue, okay, Dawson? And again, that's another question for your accountant, and they can help you with this. Or if you have a bookkeeper, this is what they do, and they can work it out for you very, very quickly. It's not difficult to do, and I do it myself. So if I can do it myself, it's probably not that complicated, okay? But again, if you're not a numbers person, I realize this more and more over the years, that if you're not a numbers person, it can be quite complicated. So plan for your income taxes, plan for your payroll taxes, plan for your corporate taxes. There's just so many taxes to be paid, and it gets quite complicated. And this is why you need an accountant, because otherwise what happens is you try and do it yourself, you make a mistake, and then you get audited, and then it's just chaos. So just be very, very careful of that. But also have a basic understanding. You know, if your accountant says to you, you owe 20,000 or you owe 30,000, you want to know why. Why is it so much? And so they can educate you. Keep track of your inventory. That's another very, very important thing. You know, I said earlier on, if you want to calculate the overall profitability of your business, you need to know what your inventory is. So one of the best ways to do that is to have an inventory tracking system. Most of these things are done automated nowadays. For example, if any of you have Shopify stores and things like that, they automatically deducted off your inventory. But again, depending on how simple or complicated your business is, for example, if you're selling musical instruments, you could probably use a spreadsheet. And then every single time you sell a musical instrument, you'll deduct it off your inventory. But you have to have an inventory system, because let me just warn you, is that if you're not disciplined with inventory, that is one of the biggest thefts in small business, okay, is usually at the back door. When you're receiving stuff, you either receive usually too little or it gets stolen at the back door. So you've got to really monitor that. But make sure that you create a system. Nowadays, most of these point-of-sale systems have a inventory system, and they even can predict your ordering. So there's software and a lot of these things nowadays. But also ensure that you've always got enough stock. There was always my nightmare as a retailer, is that, if you order too little or you order too much, or even worse, if you're disorganized, like I was in the beginning, you forget to order. Oh, it creates so much anxiety in your business. There's nothing worse than a customer coming in and you don't have any inventory, and you thought you had and you don't, and you go and look for it and you can't find it and things like that. So just make sure you keep a record of your inventory. And also just remember, you cannot calculate your overall business's profitability if you don't take inventory. Otherwise, you're just guessing. And this is the problem I have with business owners, is they don't count the inventory, so they don't know what profit they're actually making. For those of you, and I'm not sure if any of you do it, but if you sell on account, 7 days, 14 days, 30 days, 60 days, some of you, make sure you follow up. I know in our business, this is the biggest challenge. We do work with governments, and I must be honest, it's got much better over the years. But of course, some of them now even pay me with a credit card. It's crazy. I will invoice them, and 5 minutes later they pay me. I think, what a wonderful thing. Does it cost me money? Absolutely, it costs me 2.5%. But it reduces my workload by a lot. So it's a cost, but it's a cost I'm prepared to incur because it reduces my workload. Because I don't know if you've ever followed up asking for money, but it's an absolute nightmare. Actually, I'm quite paranoid. And the reason I'm paranoid is I think I've been in business a long time, and I'm suspicious of, doesn't matter if it's a small business or a big business, I'm always thinking, are we going to get paid? So I don't get excited about any project until we get paid. And I know it's a bad habit, and I know it's a paranoia and all that type of stuff. But you know what? It's kept me going for these last 30 years. And I think I really struggled in the beginning when people never paid us. And it caused me so much heartache as a business owner. And I think that's why I've become a little bit obsessive about collecting money. So my clients know, and I'm sure some of them even get a little bit irritated with me because I'll follow up straight away. If the money's due on the 7th and you don't pay, on the 8th, you're going to get a call from Andrew and saying, did something happen? Is there a problem? Whatever it is. And usually somebody that's gone on vacation, or that they didn't receive the invoice or whatever. I can think of one client, for example. She always says, I didn't receive the invoice. And I think to myself, really? I send it to you. I've got an automated system that automatically sends it. So now what I do is our accounting system sends her an invoice and I attach it as a PDF. I'm thinking, no excuses. You got the invoice, pay us. But it's, there's nothing worse than selling stuff and then not getting paid, especially in this economy. If you read the newspapers daily, or not newspapers, but anything online, lots of problems are happening like that. Also be frugal, cost conscious, look for ways to reduce your expenses and increase your profits. I'm always looking for the ways of doing that. And it's usually, in our case, we use software and different things like that. And there are certain things we can reduce, others we can't. But the key is, you want to negotiate with suppliers, but you also don't want to sacrifice quality. So just be very, very careful. Actually, I was thinking about it earlier on. I know 2 business owners that work for a large company, and a very, very successful company, then use that model to open their own businesses. And one of their rules was, whatever material we use in our business, it's got to be good. Doesn't have to be great, but it's got to be good. And that has been their strategy for years, 20, 30 years. They've run their business like that, and it's worked really well for them, okay? But they're looking for value. They're not looking for price. They're looking for value, something that they're happy with. And I think that's, you got to decide. The other thing, you want to create a long-term financial plan. Okay, so this is quite an important thing. I am very wary of financial advisors. So any of you on this webinar that are financial advisors, I apologize, but I'm very wary of financial advisors. Here's the reason. Is I don't like taking advice from people that are less successful than me. And it's a bit of a thing. But the point is that if I give you money to invest, I want you to manage it well, not make excuses. A bunch of times over the years, I've gone to financial advisors, highly qualified, well recommended, all of this stuff. I give them money, and then they don't make money for me 2 or 3 years, and they've got all the excuses in the world. So nowadays, I manage my own money, okay, which is quite challenging, I must be honest. And I've got to invest in real estate, I've got to invest shares and all these buy stocks and all those type of things. But the truth is, I have no option. When I decide to stop working, which I don't think is going to happen because I enjoy working so much, so that's a decision. You know, you go through stages in life, you think, will I work forever? And I think I probably will. The only reason is because I enjoy this. I believe I'm still contributing to communities, and I think I do a reasonable job when it comes to running webinars and seminars. And I've got all this experience. I've been doing this for 25 years. I've, every single scenario that comes up, I've probably dealt with it before. And not that other people can't do it, but that depth of knowledge I'm trying to transfer now. So I think I'm going to be doing that. And then you've always got to try and work out, it's a crazy thing. But I think like 10 years ahead or 20 years ahead is, will I have enough money? And all of you have to think about this. It's not a nice thing to think about, but you have to think about it. For others, the other thing you have to think about is your exit strategy. How are you one day probably going to start working less? Maybe that's one of the things you've got to think about. But it's one of those uncomfortable things that you've got to do that some of us don't like doing. A very, very important thing that I've said many times on Tuesday, I said it many times today, and whenever I speak to business owners, I say the same thing. Get in a good accountant. This is so, so important. How many times I speak to business owners that don't have good accountants and they complain. Your accountant is your advisor and one of your most valuable advisors, because they know how your business is doing, they know how much money you have in the bank, they know how the tax system works, they hopefully financially savvy. But I know my accountant, Angelo, we have a really good relationship. He does my financials, he does my personal taxes, but we discuss every 90 days, I'll go to him for coffee and we'll discuss, I don't know, investments and things like that. But it's one of the best relationships I have. Why? It's important because he can save me a lot of money, he can advise me, can educate me, and these are the advantages. And finally, most importantly, is keep learning. You've got to understand this stuff, running a business can be quite hard. I've been doing this for 30 years and I still learn new things all the time. Why? It's hard. So keep learning, keep attending seminars, keep attending webinars, speak to your accountants, speak to your bankers, speak to your advisors, and you'll become a better business owner. All right, I'm going to answer a couple more questions and then we can end off this mastermind meeting. Have you seen a business that used value-based pricing and ran out of business? Dawson, I don't know what value-based pricing is, but let me just make an assumption because I'm not smart, so I don't know what value-based pricing is. But let me tell you what sometimes people do is they'll charge a premium because they think they're adding more value. So industries that do that are, for example, furniture. So not furniture, sorry, jewelry. Jewelry, often they will base the price on what it visually looks like. So even if it costs $5 to make, if it looks like a $500 ring, that's what they charge. So they charge a thing on value-based prices. The prices were too high and nobody bought the products. Again, that's a really important thing sometimes. If your prices are too high, there's a couple of scenarios. One could be you're selling to the wrong audience. Like anything, for example, I read a lot of books. So for me, a book is not an expensive thing. But if you're not a reader of books, a $30 book might be very expensive. So I think this is where pricing is a really, really important thing, is you want to find customers that are prepared to pay the price you want to charge. Otherwise, this is what happens. If you go after the wrong customer, you're going to have to discount because they don't value your product or service as much as you do, really, at the end of the day. So it's really, really important. I'll give you a very good example that I have. I have two prices, okay? So a small business owner will come to me and they'll say to me, can you consult with me one-on-one? And I say, no. And they say, why? And I say, because I'm going to charge you a price that is very, very high and you're not going to be able to afford it. And then, or you're going to complain about it. So I have two prices, either the price I can charge or zero. Those are my two prices. And people say, well, you should at least charge something for your time. The reality is that if people are not prepared to pay my price, I don't want to be working with them, okay? I may help them for free and give them a bit of guidance and advice and things like that, but I don't want to think I'm worth $500 an hour and get paid $30 an hour. And I get this every now and then. People message me or phone me up and say to me, Andrew, will you run the seminar, but our budget is only so much. And I say, no, I can help find something for you, or I'll do it for nothing, but I will not, get paid under my rate. So again, when it comes to value, it's about confidence. It's about going after the right target market. It's about good marketing. It's about all of those things. I think, some of the examples I can give you, for example, if you've ever done junk removal, the most expensive company is usually the most well-known. Like 1-800-GOT-JUNK. They do garbage removal, but they're more expensive than anybody else. Why? They believe they add value more than anybody else. So again, usually it's not going after the right target market. So when people will not pay your price, it's because you're going after the wrong people. That's my opinion. All right. Thank you very much, everyone, for attending this event this afternoon. And those questions were absolutely brilliant. I really enjoyed them. Thank you very much. I will be back next week. We're going to discuss marketing, which is always an interest, marketing planning, which is always interesting. I encourage you to sign up for next week's event on Tuesday. If you know any other business owners that should be learning, tell them to sign up. These events are free. And as Chris said, they come to an end on the 23rd. So sign up now, and I'll keep educating you. On Thursday next week, we'll have another discussion. If you've got any questions, feel free to write them down and bring them to next week. Thank you very much, everyone, and I'll see you next week. Have a great week.